Hi, and welcome to Leaders in Lending. I'm your host, Jeff Keltner, and today I'm joined by Gary Fan from Gateway Community Bank. Gateway is located in Oakland, serving the kind of Bay Area and greater California area as a relatively small bank. But Gary, you're also nationally chartered, so a bit unique in the smaller bank world to have OCC oversight and in a national charter, so that's exciting. Gary is the EVP and Chief Banking Officer, which means you oversee, I understand, sales, marketing, and operations, which seems like a lot of stuff on your plate, Gary. That seems like quite a bit of the institution you got to manage right there.
Thanks for the intro, Jeff. It is a big responsibility, but we have a great team and great support folks in the organization, so it's not quite as stressful as it seems.
Well, I appreciate you making time to talk to us today. I'm really looking forward to the conversation. You and I spoke a little bit before we started, and one of the things I ask many guests is what's a commonly held belief about consumer lending that you passionately disagree with? And I really enjoyed your answer to this, so I'd love to ask you here and just have you talk about your perspective on consumer lending and how maybe it's misperceived by many.
Yeah, I think I think the general population views consumer lending, or at least the people making consumer loans, as people trying to take advantage of the client. And I think in reality, there are organizations that are only caring about their bottom line, and all they care about is profitability and how quickly they can grow. But there's a significant population of banks, and some of these are the biggest banks, some of them are community banks like us, who what we're looking for is a mutually beneficial relationship. And if there's something that only benefits the bank but doesn't benefit the customer, we're not going to want to pursue that, because that doesn't create the long-term relationships that make sense for where we want to go. So I think the misconception for me is just a kind of misinterpretation of what lenders are doing out today in the marketplace. I think there are good lenders just like there are bad lenders as well. I think the future of how we can tell whether that's the case or not is more transparency and more education. And I think that's something Gateway's trying to do. I know that's something that Upstart does a great job in kind of showing all that information to clients before they make those decisions.
I love that almost every conversation I have, we end up with helping the consumer achieve something that's meaningful in their life being the true North Star. I think it's right. Always nice to see that alignment. You also made a comment about you think of the bank's role in some ways as giving people time. I'd love for you to expand on that a little bit, because I thought that was a really interesting way to, typically I think of the bank's job as giving people money.
Right.
But you thought of it in terms of time, which I thought was a really interesting way to conceptualize the value you're providing in terms of a loan.
Yeah, I think, and I can't take credit for this. This is my earliest business mentor who told me the most valuable commodity in the world is time. It's something, no matter how much money you make, you can't ever buy any more of. And I think that resonates a lot with me. And I know, in the consumer lending space, I think that's actually how I think about loans. The example I used was, when someone's looking to buy a house. If you're looking to buy a house in the Bay Area, you might have to save $1 million, and whatever job you're in, even if you're a highly paid tech software engineer, that's going to take you a few years to accumulate that amount of money after tax to be able to buy a house. What banks do and other lenders is to give you time. Like, instead of saving 10 years to buy that house, you can save maybe 2 years and live in that house for those 8 years. And we can lend you the difference so you can enjoy those things that you want to enjoy now. Now, that does come with a cost. You do have to pay some interest. But in the grand scheme of things, I think that's a trade-off. You're trading some additional compensation in your future for time. You get to enjoy that stuff now. And it doesn't just apply to mortgages, similar to maybe a car loan or a business loan. That kind of thing helps you scale your business quicker so you can retire earlier or achieve your goals faster. And generally, that's how I think consumers need to think about these opportunities. I think loans that are available to them, they should be thinking about this in the framework of looking at it as additional time that they get, or kind of convenience in their life.
I love that comparison, or that way of thinking about it. I had not thought of it that way, but it makes a lot of sense. Now, my understanding is historically, Gateway has been a somewhat traditional lender in terms of the kinds of loans you focused on, and also the kind of process being primarily branch oriented. Can you give me a little bit of history there on the kind of loans you guys typically do and what that process looks like? And then I'd love to dive into how you're thinking about how that shifts as we move into a more digitally enabled world.
Yeah, Gateway traditionally is a kind of brick and mortar community bank. We've had a few branches in the Bay Area, and we did, commercial real estate loans. residential mortgage loans. We did them the old-fashioned way on paper. You talk to a loan officer. It goes to underwriting. It takes 45 days to eventually close and all that. And one of the things I'm in charge of today is helping to digitize and modernize the bank. That really means figuring out new channels to reach more customers, and even the existing customers, creating a customer experience that's much smoother, that's quicker, and sort of less friction. And I think one of the ways of doing that is to have online digital channels that allow convenience and flexibility. So even down to the most basic thing of opening a bank account. Historically, you had to come in, bring your forms of ID, sit down, talk to a banker. It takes 45 minutes. And we're working on a project to be able to do that entire process online through your mobile phone, and you can do that in 3 minutes with even more kind of security features to make it just as safe as talking to a banker in person. So I think opportunities like that, and then opportunities to do this also in the lending space, to take a look at how can we do consumer loans, how can we do mortgage loans, how can we do even business loans like this in the future. Those are the opportunities I think that Gateway's pursuing to kind of open this up and be able to serve more customers in California and maybe the rest of the country in the future.
Love it. So how do you think about when you're looking at you mentioned simplifying the current processes, but also getting into kinds of consumer lending or C&I lending or other things that haven't traditionally been available for the bank? How do you think about the prioritization or where you focus those efforts in terms of, the standard mortgages, commercial real estate deals versus being able to open up the new kinds of assets and products that you can actually bring to your current customers, to new customers when you're thinking about going digital? Because there's two different things, right? Take my old thing and put a better experience into it and bring products that maybe weren't even possible for me to offer profitably before into the fold for my customers.
Yeah, I think a lot of this is based on just new opportunities that arise. I think I think there's companies like Upstart that help us look at different opportunities that we might have thought from a pure cost standpoint didn't make sense or we couldn't make it work. Ultimately, I think for Gateway and for I know many banks out there, it really comes down to the risk profile. And I think generally banks really look at risk in a very kind of black and white way. I think most bankers would say, hey, if it's a real estate-backed loan, then it's more safe than a non kind of collateral-based loan. And I think that's starting to change. We're starting to see some differences. I think for Gateway, we have some people on our board that see it that way and some people that don't. What we like to do is try out kind of pilot programs that are smaller in size so that we can test out, get the financial results that everyone's looking for, and then really vet to see what the reality is. You can always kind of think about consumer lending as a higher risk loan category, but within consumer loans there are a lot of good consumer consumers that are going to pay on time, that are going to be really, really great customers. And I think it's just a matter of how do we locate those and how do we onboard those onto the bank. And I think that's the approach that we want to take. And once you have the kind of results, then you can help change the rest of management's minds. You can change the board's minds, and ultimately the investors, who have such a big say in kind of the future of the banks. They're really looking for a return. So if you could show them, I get better returns, I have less risk, and ultimately the experience shows that this is maybe even less risky with higher yields than, let's say, a residential mortgage or a commercial real estate property, then I don't see any reason why this can't be a bigger part of community bank's balance sheet on a go-forward basis.
Yeah, I love the concept that you have here of limiting risk in different ways, right? Because there's the risk of an individual loan, and I think a lot of times banks get very caught up in the credit risk of an individual loan, but you also have to look at, to your point, how big is the portfolio I'm building in this category, and so therefore what's the risk to the bank, and then as you and I were talking, the size of loans, because when you have smaller dollar size loans but larger number, there's a safety in the diversification across a larger number of consumers versus maybe larger loans where you want to feel more safety. And so I think it's a really interesting concept. Like, how do you think about risk on different levels to get comfortable with the way you may go? I don't know if you want to say anything to that, but we were talking about that. I thought that was a really interesting way to think about the breakdown of risk.
Yeah, no, and I think the other thing that we chatted a little bit about was just how banks look at risk. And I think as time goes on, I think that's going to shift. And I feel like at the regulatory level, we're starting to see some flexibility in looking at other products that maybe weren't traditional for the kind of the community banking space. I think the other important thing, and I know kind of the tech industry has done this better than anyone, is sort of the customer acquisition aspect of this. And I think, specifically in consumer lending, if you're working on a project where you're looking at going to grab new consumer loans, the other opportunity is these can be clients. There's a lot of people that not just loan clients but deposit clients as well. And I think most banks, big, small, regional, community, or kind of the mega banks, the reality that's actually what they want. I think the value really comes from this kind of entire relationship you can capture with the customer. And so, I think I'd encourage more banks to take a look at opportunities for them to expand product lines and extend products and services so they can reach a new client base. And ultimately, on a longer term basis, this will be very helpful to that growth of that particular entity.
Yeah, that's interesting. I hear so many banks who I think the historical approach is customers come in through deposits and then they're monetized through lending. And this idea that you could actually lead with lending and bring somebody in and expand that relationship. I mean, it's always seemed as a tech guy backwards to me, and that you make the money on the lending. So wouldn't you want to have your first product be a profitable one? Do you see that shift and people starting to look at bringing customers into the bank through not just the depository, the standard, here's an incentive to get your checking account here, and then the assumption that you'll win the business, but actually figuring out how to bring people in through other products in the deposit, and then actually bring them into that depository relationship as the second product as opposed to the first? Is that something you guys are thinking about, or you see happening in the industry? Because it is, I think, a different approach than historically I've seen banks mentally take to how they acquire and then grow relationships.
Yeah, I know for Gateway that's definitely something we're discussing on a regular basis with management and with the board. We don't mind whether we're leading with deposits or loans. Ultimately what we want is the mutually beneficial relationship. We want to grow with these customers, consumer customers and business customers. As they grow their financial lives, we want to be there to support them and grow with them. So I think banks are starting to look at it this way. And I think we owe a lot that to kind of technology sector. And historically it was even more about customer acquisition than anything else. Revenue, profitability. It was just more, hey, how can we go grab all the customers? And I think there is that type of thinking that's bleeding into banking a little bit. I will say that at the end of the day, though, because this business model is a little bit more constrained versus others due to the structure of financial services, maybe we as an industry have been a little bit more conservative. But the positive thing is I do see that changing as new leadership takes over in some of these new entities.
Now, I know you guys started some of your real digital offerings through the pandemic with the PPP program. Tell me a little bit about how you got that going, the results you saw, and then kind of maybe how that points the way to what you think is possible in the bank longer term from a digital point of view.
Yeah, so the PPP loans that were part of the CARES Act were a big kind of test case for us, and we really didn't know what exactly to expect with that. Originally, we really just thought we would offer that to our existing customers, but we worked with some technology partners, and we were able to create an online application so that the entire process, the upload of documentation, the credit review before submission to SBA, all of that information was done online through one seamless system. And what it showed us was that it gave us an ability to scale. So at the end of this program, through the two draws and the 2 rounds, I think as a community bank, I think we funded over 1,000 loans for over $50 million in funding. That's and great. Our board was extremely surprised. And then, the financial impact to us was this great thing, right? We obviously generated some interesting fee income for us. And then for us, there was that kind of altruistic feeling of we really got to help out our local community, the restaurants that were here that were impacted, the small businesses that were hurt, the employees that maybe were going to lose their jobs. So it just felt there was this mutually beneficial thing that everyone got to be a part of. And then at the end, our board and our management looks at the financial results and they say, wow, with this amount of effort, we were able to generate this amount of return. And so we're thinking, well, why can't we do that in other kind of products and services as well, which kind of led us to think about opportunities like Upstart and other companies that can help banks kind of expand into things that maybe they weren't as comfortable with before, but because we now have this experience, we know how to do it. Not to say that there weren't any growing pains, because There definitely were. But yeah, overall, it was a successful program, and I think it really created the foundation for Gateway to say, okay, yeah, let's pursue this on a more kind of aggressive basis, and let's really go find out things that other institutions aren't doing, right? Because ultimately, I think that's something that's important too. I think banks do need to differentiate themselves, because if we're just playing kind of the commodity type game, we just know there will be continued consolidation, and many of these community banks and regional banks won't exist in 10 years. And I think for most of the leadership team, investors, and board, but we want to continue to be a part of our community. So we do have to look at these types of partnerships. Otherwise, you're just not going to be here in the future.
Yeah, you talked about that risk of not being here. What do you think drives that kind of systemic or really existential risk for you, that if you're not able to adopt some of these things, to your point, you may not be here in a decade or a little bit more? What do you think it is that drives that kind of risk to the bank, and then how do you think about how you offset that?
Yeah, I think and I think this is not just specific to the banking industry by ourselves. I think this is something we've seen in almost every industry. When technology comes in, a lot of the old guard, or people that are currently in authority positions today, they're more worried about, how do I keep my job? How do I keep my regulators happy? How do I keep my investors happy today? And that's not a bad perspective. I think that's what some managers and some executives, that's what they're focused on. Like, how do I make my investors okay today? How do I make sure that we get the yields that we want, and get the right type of returns? But I think if you don't think about the big disruption type of events, then what you're going to turn yourself into is what we've seen in the other industries. So this is Netflix versus Blockbuster. This is Ubers versus taxis. This is Amazon versus brick and mortar. We already see it happening, and it's there's this big shift in kind of digital channels and digital delivery. And I think if you're an institution that thinks, hey, I'm just going to stick my head in the ground and not look at these type of opportunities, I really think your days are numbered. And the statistics speak for themselves. I think, I was reading maybe 15, 20 years ago, there were maybe over 20,000 banks in the U.S. Today, that number is under 5,000. So, you can keep hoping that you'll be the one that continues to be here, but if you're not gonna adapt and change, then you're gonna be at risk. And I think the last point on this really is the fundamental reality of banks. Is the majority of clients that banks have today are from relationships they've cultivated over decades, right? And these are great things. They're great relationships with business people, with consumers that love the bank, like working with the bank. But when that population retires, and you see that giant wealth transfer to the new generation, the newer generation isn't banking with community banks or regional banks. They're going to bank with whoever makes it easiest. And they might not even bank with the big banks like a Wells or a Chase. They might see a new fintech company or a new company that does things very differently and hits the things that they want to be involved with, and they'll leave. And so I think that's the existential threat that banks really, really need to address. And I think what I see is a lot of talking. Everyone has a great idea, but at the end of the day, it's about execution and actually doing what you're saying that you're going to do. And so I think that's the risk to this industry. And I think the folks that are going to be able to execute and do the things today to prepare for that are going to be the ones that win in the future.
I think it's a great point. I'm really curious too on the. You talked about the PPP loan program kind of opening your eyes as to what was possible. And also, I guess I would internalize what you said as kind of building confidence in the team in their ability to execute in this space, right? And that's, in my career, I've always seen that sometimes you got to kind of start small and grow. You can't boil the ocean, right? You got to pick a problem solve. Yeah. Have you seen any changes in approach or mentality or anything you learned from the successes and the challenges of that program that you're applying to, what are we going to do next, and how do we think about making the next program more successful or getting improved internally, or talking to the regulators about what we're doing, that you're kind of taking away from those early experiences to help you in the second experiences?
Yeah, 100%. I think some of this is kind of general stubbornness, and I'll put myself in that situation too. There's certain concepts that I have that this is what I learned, this is what I think works, and when you try something new, it feels like an attack against the value system that you have, and I think that's part of the resistance we all just need to kind of give into and try it out. I think one of the greatest things I've seen with PPP is we've sort of convinced all of the existing management, and we have some folks that have been in the industry for multiple decades, and they're like, this is great. Maybe we don't have to physically underwrite every loan ourselves. Maybe we can use an algorithm to do it. This makes my job easier, automated reports. If the regulators want to see something, I have all the data there. Everything is digitized and automated. And I think part of it is because when they were kind of earlier in their career, they never had the chance to deal with processes like this. So there's sort of a hesitation, not because they don't like the new thing, it's maybe they just don't know how it works. And if you have partners that can help walk you through that, then it really helps. And at the end of the day, I think digitization, I think, is a win for everyone. Win for clients, win for bankers, win for leadership, and a win for the regulators. When the regulators ask for, what are you doing with this portfolio? If we have everything, it's not paper files that we got to scan, and then it's not an Excel file. It's in a very nicely presented report in a nice dashboard. And if they want detail, they can click in and look at it. I think these are the type of tools that exist in a bunch of other industries, and maybe banking's just taking a little bit of time to adopt them. But I think I'm very optimistic about the future of it, and I think that's really helped kind of shift the perspective, and at least the bankers that I know at Gateway and also not, kind of thinking more, how can we do these types of new projects and use technology to help us.
Yeah, I think that's a great learning, and I hope it serves you well over your next couple of over projects, because I think it certainly it takes time. But again, when you're aligned on that true north of helping out your customer, I think that when you can see how these things connect, that always helps people come on board. When you think about these projects as a smaller institution, how do you think about one of the things I always hear from X is build, buy, partner. I'm always a little curious what buy and partner are. I think they're often more similar than people think. But how do you think about deploying digital capabilities in terms of what you want to own in house, where you want to partner? How do you think about that, particularly as somewhere that doesn't have as many resources as a J.P. Morgan Chase or a Citibank or a Wells Fargo? How do you come down on where you think about what you want to build, where you want to partner externally?
Yeah, I think it's similar to what type of customers does your bank want. I think ultimately it comes down to meeting the salesperson, meeting the implementation team. Kind of just seeing exactly who this company is that you're trying to partner with. I know there's a lot of noise out there. There's a lot of promises made about the capabilities. There's even kind of commentary about we're true partners. Where there's some institute and some companies that present themselves as partners, but they're more trying to aggressively kind of eat market share, or maybe one day they want to buy a charter and they want to be a bank themselves, and they're trying to dip their toe in the water and get those partnerships. I think you have to be somewhat skeptical initially, but again, if you take a look at what you just said, true north for any institution, any service institution anyways, which should be, we're looking for a mutually beneficial relationship with our customer and for the company, then you really can find partnerships that work, right? If there's companies that what they say they're living up to, you can take testimonials from their other customers. You can take a look at what they're actually doing, from a business aspect standpoint, and ultimately for something like the partnership between Upstart and Gateway, I think we're looking at are we coming together to create a better channel to go serve a customer, and is that mutually beneficial for you, for us, and for the customer? If that answer is yes, then yeah, I think that's how you tell whether it makes sense or not. And I think you got to be honest too. If you're in a position that's making this decision and that's not your strength, you maybe don't read people the right way, or you feel like you don't have the full picture, that's when you should bring in other people in your organization to help you make that decision. That's what your management team's for. That's what your board's for. And maybe it's your job to kind of be concise, distill all that information to a one-page, very simple overview so they can make a better decision. But I think it's not easy to determine who's the best partner, what makes most sense for your market. But I think it's just part of that due diligence that you owe to yourself and to your organization, that you just have to go through that process.
Okay, well, I'm glad we were able to make you comfortable through our conversations with Upstart. I know we spend a lot of time trying to make sure we can do that well, because it's important to us to be a good partner. I wanted to ask one other question before I get to the kind of final three that I always in the podcast with, just is when we were talking earlier, you used the word leapfrog to describe one of the things I think made you excited about the opportunity is an institution that wasn't as far along the digital journey, a year ago maybe as some others. So tell me what you mean by that. Like, what is it about the ability to leapfrog that's got you excited, and what do you mean by leapfrogging in that context?
Yeah, I think Gateway was just a traditional brick and mortar bank, and we did everything sort of manually, and our systems were maybe a little bit outdated. And one of the opportunities is obviously take a look around, see what other people are doing, and then make sure your products and services catch up to the competition. But I think that's a little short-sighted, because it's not as if competition's staying pat, right? Everyone's evolving and shifting. So I think with Gateway, we're looking at it as an opportunity to do some of the catch-ups, because we need to do that. But the leapfrog idea comes with, okay, well, what are things that we want to do that we don't have the capability to, and maybe we don't have the staff to do it, we don't have the scale to do it, but with a partner you can fill in those gaps. Most banks don't employ software engineers, but guess what? There's an entire industry of software engineers that want to figure out how they can monetize their services to help financial services. So find those partners that can help you. Again, if it's mutually beneficial, then it makes sense, and that's what you have lawyers for. That's why you have an engagement agreement, you have contracts, to kind of spell out the terms as best as possible. But ultimately, it is a people. Business is sort of a people thing, and so if you meet management on the other side and you guys connect and your goals are the same place, then that gives you a much higher likelihood of having a longer term kind of good positive relationship. And that is what Gateway's trying to do. We're trying to kind of leapfrog other folks within this industry, because we believe if you don't do that, then you're not going to be here long term.
Yeah, I think that message too, that the competition isn't standing still, is really important, because I think you have to find the partners and the strategies that not only get you to what's par today or better, leapfrog into things that people can't do, but also acknowledge that I want the strategy that's going to keep me on that innovation change, because my sense isn't that that's slowing down, that it's a step function change and then we're done, and the technologies today will be the technologies for the next decade. 10 years from now, it's going to look even more different from today than today does from 10 years ago. And how are you on not just the right technology for today, but on the path to be in that same position 10 years from now, I think is a really important question.
Yeah, no, I agree 100%.
All right, Gary. Well, I always end this podcast with the same 3 questions, so I hope you thought about them before you came here, because they're not easy.
Okay.
But here they are, and I kind of do them rapid fire. But what's the single best piece of career advice you've ever gotten?
I might have mentioned this earlier, but I think the best piece of career advice I've ever gotten is that you can never buy more time. So do the things you want to do. Don't wait for them, right? If there's a digital opportunity you want to pursue, go do that. If you're unhappy with where you work, then change that. We only have a limited amount of time, and I think people need to do what they want to do.
I think maybe you took this and made it life advice and not just career advice, but I think it's a great overall perspective that I very much appreciate. So, second, what's the single best piece of advice you've gotten about the consumer lending space?
Yeah, I think I got really lucky. One of the CEOs I reported to, he gave me a shot to run a P&L, and he gave me kind of the consumer lending practice of this bank in North America. And one of the piece of advice he gave me was, don't listen to the predecessor, don't listen to me. Just go in and take things apart, try to understand it for yourself, and make your own conclusions. And I think I really took that to heart. So I did spend, I think, maybe 60 to 90 days really sitting with every person and following the client experience, following the loan file from start to finish. And that really gave me a really, really good understanding of how that particular bank did that particular business. And I think as kind of leaders in banking, I think sometimes we take things for granted and we don't fully understand every step of the process. And with that, you kind of miss out on efficiencies or opportunities that you can improve. So I think consumer lending is something that, as a concept, I know there's a lot of banks that do it. I think from a community banking standpoint, a lot of the smaller banks don't focus too much on it, but I think that just means there's a big opportunity to onboard a new line of business that can be very beneficial, both again to the bank and to the client, and ultimately something that can help the bank grow. So I think if you don't have that function in your institution, I think that's a great opportunity for you to kind of build it up, soup to nuts. And I think that type of advice that I got from that particular leader really helped shape how I look at new products and services for Gateway.
I think that's such a fantastic answer. It reminds me of two things. One is the kind of Elon Musk's approach to first principles thinking, and you kind of mentioned how much inertia there is around the way we've always done it. And I think it's easy not to really understand the way we've always done it, and then why maybe that is or isn't the right way or the right set of assumptions. And so understanding at a detail level how your business operates and then how you can understand what the opportunities are to improve is such a fundamental thing that, to your point, many people just don't do. You can come into a role and go, these things are just kind of givens and I'll just leave them be.
Right.
And diving into the details gives you such opportunity to see the areas for improvement, the opportunities. It's a great piece of advice, I think, for any category of business, but consumer lending for sure. And then my last question, what is one bold prediction for the future? It doesn't have to be consumer lending, great if it is, but I've had Super Bowl predictions. I've had somebody who couldn't come up with one, but
Okay.
what's your bold prediction for the future?
It's just a quick moment on Super Bowl, and this is just more recent news, but I heard yesterday that Aaron Rodgers doesn't want to return to the Green Bay Packers, and so I feel like whatever drama they got to work out there is it probably means Green Bay is not going to be in the best chance to compete for one this year.
So you make a bold prediction Green Bay doesn't make it back to the okay.
They're my team, so I wish they would get it together, but it sounds like they're not going to. But anyways, I think that the bigger prediction, I think, relating to financial services and consumer lending is I do think banking in particular is very ripe for some significant disruption. I personally believe that what's happened in these other industries, whether it's transportation or whether it's auto manufacturing with Tesla and a lot of these other companies, whether it's Uber and taxi drivers, whether it's Netflix and Blockbuster and Amazon and brick and mortar. This is what's going to happen to banking, and where the reason why it hasn't happened yet is because of kind of the way that financial services is structured. But it is going to change, and I feel like it's coming. So I do think, when the people that have been in charge are getting closer to retiring and kind of the next generation gets an opportunity to lead, we're going to see some significant disruption. And I think with disruption, there's a lot of good for the new clients, and existing clients who participate in this space. I think it will cause a lot of changes, from kind of product services and even the way that banks are structured. I mean, I think COVID really helped accelerate that. But I do think, to your point, I think in 10 years, the banks that are kind of currently kind of holding a lot of the power and a lot of the kind of strength in this industry, I think you'll see some significant shifts. And some of them might be even stronger, but I'm pretty sure a lot of them that are in really, really strong positions today are no longer going to be in those same positions.
All right, bold prediction. The changes coming to the banking industry. Get on board or get left behind. I like it, and I like that we always come back to the true north of the growth, and the products are really driven by what's right by the customer. Like how do we make their lives better? Help them buy a little bit of time and take advantage of the things that they want to do in life. Gary, thanks a lot for joining me. I appreciate it. This was a great conversation.
Yeah, thanks for having me, Jeff.